Welcome to Pressure Points. Our topic is Tesla deliveries, and we're going to break this conversation down into three pieces. First, understanding how much of the September quarter benefited from the ending of the US tax credit. Second, what does that mean for their deliveries in the December and for calendar 26 and 27? And third, what's the bigger picture? What does this mean for the longer term for Tesla? And I'll jump back to the beginning as far as trying to get a better sense of how much did the US tax credit benefit the business. And as of this recording, we're call it an hour and a half into the market. The shares are down about 1.5%, which has a feeling of a little bit of a buying the rumor, selling the news. But that down 1.5% should be taken in the context that the stock is up 36% over the past month. And so it's actually doing really well. If this was just purely a buying the rumor, selling the news, the stock would be down much more. So I think that it's holding up, which tells us a little bit about the longer term. But I want to focus in on what was the impact of the tax credits in the September quarter. And a good starting point is to look at what was the run rate of the business going into September. And so in the March and June quarters, the deliveries were running down about 13%. If you take into a point that the China business showed some rebound, it was kind of widely believed by the buy and sell side that China, some of the Model Y improvements have boosted some of their China business. That I think it's reasonable that the overall business would have been down 5% in the September quarter. So again, down 13 in March and June, and showing a nice improvement to down 5 based on China improving. This is the theory that there is no U.S. sunsetting of a tax credit. But that's not what happened. The numbers weren't 440,000. That would have been down 5%. The numbers were 497,000. So if you take that gap between down 5% and what they actually reported, that's 57,000 units, which we're largely attributing to, I'm going to say almost entirely attributing to what happened in the US. So there is a sub question to that, which is that reasonable that sunsetting of a tax credit could cause an additional 57,000 sales in the US? And as a kind of a point of reference is that if you assume that 440,000 was kind of the normal number without the tax credit, and you look at that about a third of Tesla sales are in the US. They don't break out the number, but that's kind of widely believed that. You get to kind of a run rate in the US of around 150,000. So with the tax credit, you take that 150, you add 57,000 on top of that, you get basically like a 30+% increase sequentially, quarter over quarter. So it's a huge jump in the US. And does this pass the back of the envelope test? I mean, is it possible that sales could jump 30% sequentially? And my sense is it could. I believe that the looming increase, 15% increase for the average buyer, was a big motivation, in part because cars are price sensitive. They do have inelastic demand. And so Elon's talked about this, about the more affordable models and about how the importance of having this to get to a much bigger audience. And so I think if you look at the context of how they think about the business and look at what happened in the overall delivery numbers, I think it's reasonable that most of this spike came from the US. Now, under normal circumstances, when you have, we'll call that a one-time effect that had a huge impact on the numbers, under most circumstances, investors would just throw that number out. Like that's not repeatable and kind of look going forward. So I want to mention that again, that largely is not happening, down 1-2%. Investors are still putting some value into that. We'll get to that in a minute here. But I want to shift and talk to the second topic, which is what does this mean for numbers going forward? A bigger number in the September quarter is going to pull numbers from December quarter into September. That's going to lower likely what they're going to do in the December quarter. And so as it stands, the street's looking for December to be down 6% year over year. I think it's going to be down closer to 10%, and part because September was stronger. That's all reasonable. In some ways, it doesn't really matter. It's all near term. But what about 2026? And that's the street is looking for 16% growth. Now, it's comping off of a big September quarter here. Those are some pretty big numbers in the context of a broader EV market that's still struggling. BYD, they reported their total deliveries down 6% year over year in the September quarter. Well, part of BYD is hybrids, part of it is actual electric only. The majority, call it 60% of BYDs is electric only. But in general, it's still the market for EVs is still largely struggling. And so from my perspective is that a 16% expectation for growth for next year seems like a tall order. And then you layer on top of that the big X card, the wild card. What happens with this more affordable model? And what we know is they've said that it's going to be available starting production at the end of this year and then starting to ramp next year. And there is a wide gap between that commentary and what ramp means and what the product actually looks like. It's largely believed to be a skinny down Model Y. And so from my perspective, I think like a true ramp where it's widely available is probably middle of next year, which is going to have a negative impact, I think, in the beginning of the year as more people kind of think about this. You get this Osborne effect kicking in. And so I think next year is going to turn out to be a much better year than what we saw in calendar 25, probably up 10% versus call it down 9% in calendar 25. So a nice improvement, but below where the street's at. For 27, the street's looking for 15% growth. I think that's going to be a surprise on the upside because I think they're going to be hitting back in their full stride by 2027. And I see upside. I think it can be a 20% plus grower in 2027. A long ways out there. Safe to say is that the numbers are probably too high for this December quarter and for next year, and then things start to kick in the out year. The last piece I wanted to cover, which is what does all of this mean longer term? If you would have given me the press release beforehand and said, what's the stock going to do? I would have said it's going to be down 5 to 7% on this news. A huge number, but again, investors kind of look past it. But that's not what's happening. And I think what investors are seeing in this is this concept that any progress with EVs, no matter how they get them on the road, whether it's through a tax credit or just through genuinely increasing in demand, whatever that is, it's a win for Tesla because more EVs on the road not only are potentials for customers for autonomy down the road, but separately is that it just continues to reinforce that they know how to make electric cars profitably. And that's a piece that largely gets overlooked in this whole autonomy conversation is that to monetize autonomy, you have to have electrification. And as the other automotive makers have stepped back over the past few months, in part because of the ending of the tax credit, as they've lowered their investments in EVs, that I think makes it more difficult for them to catch up when autonomy does catch on. And their belief is that the progress towards autonomy, this is traditional auto, progress towards autonomy is largely going to be a linear path. And that it's call it 10 years away. And by 2030, they can start re-engaging and ramping and trying to figure out how to make EVs more profitably. But my belief is that the improvement in autonomy is going to be more exponential and that we can, over a 2-year period, have this kind of at our doorstep. And that's the piece that is most encouraging here is that Tesla is showing that they can sell a lot of electric cars that call it 500,000 in the quarter. BYD, if you look at just the electric piece of theirs, is about 600,000. So kind of a pretty similar type of a run rate there. But they are kind of standalone. That compares to Ford. When you look at their, in the US, for example, their hybrids and electric in the September quarter at around 30,000. I mean, just like orders of magnitude more. And that orders of magnitude more lays the groundwork for autonomy ultimately. And I think that that is the long-term benefit. That is the key selling point. When people buy Teslas today, they like having electric. When they buy an electric car, they see the benefits of electric. But the autonomy piece is the reason why they get excited. And so that's the long-term view is that this good number today Yes, a lot of it was one time in nature, but yes, a lot of it lays the groundwork for future progress and widens their lead towards reaching autonomy. On behalf of Pressure Points, I'm Gene. Bye for now.